Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only and I'm not a financial advisor. So for those of you who do not know, I have over 20 years experience teaching accounting, economics, business and law. So through this channel, I'd like to bring you some stock analysis and also a short 5-minute trading lesson at the end, so please stay tuned. So let's have a quick recap on some of the shares that we have looked at. About 4 days ago, I brought you a detailed stock analysis of Orbital Energy, ticker symbol OEG. I'm very pleased to say the analysis in that video did come true. So very pleased. In that video, I did say that the share price was hovering around about $8 for quite a while and was ready to move up to close to $10. So very pleased for those of you who took an advantage to make an entry point into Orbital Energy, and we saw fantastic gains yesterday in excess of 16%, closing at $9.86. So congratulations to everybody who invested in Orbital Energy. Another stock that I brought you analysis on, ticker symbol SENS. Again, this is a stock that I'm very bullish on, and congratulations to everybody who invested in this. Yesterday's video was my second analysis video on Senseonics, and this is a stock I do intend to hold for the long term. Excellent outcome for this stock yesterday, growth in excess of 26.9%. So please refer back to the video where I did bring some breaking news on this stock. So that's fantastic stock. Galaxy is another one that did really well, obviously based on the earnings, so we'll have a look at that shortly as well. So a couple of stocks also came into our buy zone. So one of this was a stock I made some additional investment in. That was stock called Bloom Energy. So put this on your watch list as well. This did come down, and I made an original investment in this as there was a good movement down on this. So and I do expect this to recover fairly quickly. So put this on your watch list as well. Bloom Energy. So let's now proceed with today's stock analysis. Okay, stock I'd like to analyze today is ticker symbol TRCH, Torchlight Energy Resources. This is a stock I invested at $2.51 on the 10th of February last week. Having researched some information after carrying out some due diligence, I did see some positive signs, and pleased to say that this paid off yesterday in the trading, where it closed in excess of 50% up, closing at $4.30. So my strategy with this stock was yesterday I sold my about 80% of my investment at $4.21. Sorry, no, $4.27. So 80% of my original investment is sold. I've left the remaining in there, and the original investment that I sold 80% of it, I've now invested that in another stock. So I'm still bullish on Torch. However, it is still a penny stock, so it is a good strategy to cash in investments once they go well in excess of 20%, and you consider using them for other stocks which are in a good buy zone. So let's now start with having a look at Torch and why I made an investment in this stock. Okay, first thing I like to do whenever investing in a new company is head over to the website. So let's start with the website here. So it's torchlightenergy.com, and let's have a look at the headlines. So Torchlight Energy Resources, currently listing on the NASDAQ, is based in Texas. It's a high growth oil and gas exploration and production company. The primary focus is on the acquisition and development of highly profitable domestic oil fields. The company currently holds interests in Texas, and the targets are established plays such as the Premier Basin and the Eagle Ford Shale. So let's have a look at something else I always like to delve into, and that is the investor presentation. So the headline here, which also grabbed my attention, they have the largest domestic onshore new field discovery in over 30 years. So now let's delve a little bit deeper into this presentation. So as an investor, I like to look at the investment highlights. So let's summarize these. So the 4 headlines here, they have Permian pure play. They are strategically diverse. They have a conservative development plan, and they also have well-developed leadership. So in terms of the pure play, the strategy is to execute within the Permian Basin to swiftly and confidently create shareholder value through the development of its assets. So this means they're going to quickly use these assets in terms of generating revenue, which is good for investors like ourselves. So that's a positive headline from the first one. Second one, strategically diverse. So they have high potential and diverse asset base, providing a strong base for continual development. So they're looking to look at different projects all the time. They have examples here. The core assets are located in the Midland project, Hazel. They have the Organ Grade project, the Delaware basins. So this is a good example of diversification here. They also, finishing off on this section here, they have 3 basins. The company expects to drill in the Wolfcamp A, B, C, upper and second lower Bone Spring, third Bone Spring, and in Pennsylvania. So third headline, conservative development plan. The company has completed lots of due diligence in terms of prospects before drilling. So this obviously is a positive move to make. Torchlight expects to drill and complete over 6 wells. So that's also positive. And finally, the leadership team has experience in mining, operating, producing, and financing oil and gas companies. So the leadership team is aligned well with shareholders, and they also have 27% ownership. So this also gives us more confidence. Okay, we're just going to have a quick look at the financial summary. So for the 9 months ended September the 30th, Torchlight Energy Resources increased revenues by 69%. So this is a very, very positive sign in terms of growth of and market share going up. In terms of the balance sheet, they have assets in excess of $40 million. We compare that with the liabilities of just over $25 million. So the company is certainly healthy and strong from the financial assets point of view, and seems to be well run by a strong management team. So let's have a look at the current developments and why this stock has been rising so well. So before we look at the current developments, let's just have a quick recap of the previous developments that were brought to us on the 14th of December. Quick look at the headline here that Metamaterial and Torchlight signed a definitive agreement for business combination. So this is an agreement for a merger, which is also a good catalyst for the share price going up. So that was the first positive news. So let's now have a look at the current developments, and we can see here the article dated 16th of February, and the headline here is Torch Stock Alert, why Torchlight Energy shares are blazing higher today. So let's delve a little bit into this article. So according to Investor Place, the company released a news article, press release, and in this press release they have said they have cleared all remaining debt. So the way they have cleared all remaining debt is they converted the $1.5 million of debt into additional shares at $1.50 per share. So that's generated an additional 1 million shares of the stock, and it's made the company now debt free. So excellent news for investors going forward. This puts the company in a very, very strong position, as obviously having no debt enables it to grow. So positive news. Let's have another look at this article from a different angle. This is brought to us from the Motley Fool. So again, similar story in terms of the debts being removed from Torch, and we can see that obviously the share price did go up at one point to in excess of 58%. So just going further into this article, there is again confirmation that the balance sheet is much in a better shape. Investors are very, very pleased despite the outcome in terms of dilution, which normally would be a bad sign. So the $1.50 per share was good value for the people with the debt, because obviously the trading price right now is in excess of $4. So the investors certainly very, very happy. So what happens now? So in terms of the natural gas prices, we can see that obviously they have increased, but this is something that is volatile. But going forward, conclusion is Torchlight Energy Resources is in a much healthy and much strong position. So a lot of confidence for us as investors. Okay, in terms of a strike price for Torchlight Energy Resources, as I said, I did sell initially 80% of my original investment, and the rest of that I have left in there to carry on in terms of growing over time. So for anybody who's not entered into this play, obviously the share price currently was trading at $4.30. So I would consider any entry into this stock below $3.75. It is going to be volatile. I do expect a little bit of a pullback. So put your notification on for a price of $3.75, which I think will be good value. And going long term on this, I expect within 1 year 2 to 3x. So very, very strong company going forward. Today's lesson of the day is focusing on understanding percentages in terms of gains and losses and making it up. So let's just start off with a simple example. For example, you purchase shares in company X for $120. So the price of one share is $120. You've bought one share for $120. So that share now goes down by 50%. So therefore the new price would be $60. So you purchased it at $120, you've suffered a 50% fall in the share value, and that's gone down to $60. So for you to get your money back, you now need a 100% gain. So in other words, the $60 must double to get the original investments out. So just because it's gone down 50% doesn't mean if it goes up 50% you get your money back. So it's a cumulative effect. So I'm going to try and show you this in a bar chart. So let's have a look at this. So the greens represent the gains and the reds represent the losses, what the gains required to make up for the loss. So if you have a 50% loss in the middle there that we just seen, to get that money back you need a 100% gain. So it's cumulative. So let's have a look at, let's say, for example, if you have a 10% gain on the far left, you need an 11%, you have a 10% loss, sorry, you need an 11% gain to get that back. And on the other extreme, if you have a 90% loss on your shares, then you need to have a 900% gain to get your money back. So this is very, very important when you consider using a stop loss. This is also important for considering in terms of your strategy to exit a play if you feel as though, because sometimes a share price could keep continuously going down. So sometimes you have to just cut your losses and get out. And I've done that on many, many occasions as well with some shares. And I use that money to invest in another company, which I believe is in a good buy zone, but I have full confidence in that company to kind of rebound backwards. So hope that was useful. Thank you very much for watching. Join me again.